Hi everyone. Let's wait for a while for the rest to join us. Okay, good to see everyone here. Today our Facebook group. Today our Facebook Live is only on one group. Let's see how it goes. Okay, it's not in the graduates group. Normally on the graduates group we have like 300 over people or 200 over people. Today is only on our public group. Okay, so see how it goes. And so welcome everyone. If you are there, can you let me know? Okay, today I want to talk about the 3 tricks to reduce your fear in trading. What are the 3 tricks to reduce your fear in trading? Okay, many people have fear in trading. So today I want to share with you all what are some of the things you can do to reduce your fear in trading. Okay. I'll start in just a while. Okay. For the rest to join us. Hi, Susan. I think people are coming in slowly because today we only have one group that's on. Okay, normally we have like 4 group on. Okay, so today I want to talk about fear of losing. Okay, how many of y'all here have a fear of losing? Okay, or fear in trading? Okay, if you have fear in trading, it's very real. Yes or no? It's a very real fear. Okay, I want to talk about a few fear. Okay, in the market right now, or when you're trading a market, there are a few fear. The first fear is what we call the fear of losing. Okay, the fear of losing is something that when you buy, okay, you feel that you're afraid that you will lose money. That's the normal fear. Okay, the second one after the fear of losing is what we call the fear of losing out. Okay, the fear of missing out. The fear of missing out. They call FOMO. Okay, you're afraid that people enter the trade and you didn't enter that trade, so you have this fear of missing out. Okay, that's the second fear. Okay, some of you all have, right? Thanks for participating today. I think it's much lower to get the participants, but never mind. Okay, so the second one is fear of missing out. Okay, so first one is fear of losing. Second one is fear of missing out. The third fear is really when you are in profit. That means you are making money and then you're afraid that your profit become a loss. Okay, that means you fear that your profit become a loss. That's the third fear. And the last one is the fear of just not being right. Okay, the fear that you are, when you enter, you're wrong. Okay, so these are some of the fears in the market. Anybody else got any other fear? You can type over there. If you have any other fear. Okay, if not, maybe I just share with you some of the tools that you can do so that you should have, so that you will have less of this fear. Okay, the first thing is when you are trading, there is what we call a danger zone. Okay, a danger zone in trading. I don't know whether you're aware that when you trade, right, that it's actually a danger zone. I didn't share this in class, but maybe now I can just share this with you all. Okay, so there is this danger zone, and how it looks like is like that. Okay, so when you are when you're trading, right, there is this area here. There's this area here where you will can't make decision. Let's say example right now, we start with $100. Okay, $100. This part, right, is the money, right? The dollar sign. How much money you're willing to lose. Here is what we call your decision making process. That means you can make decision. How well you can make decision. Okay, so let's say example your fear, your loss is $100. Okay, there's no worry. You can actually make a decision. And then let's say example, it go up to $200, you can still make a good decision based on $200. And then it can go up to maybe I don't know what's the figure. Some people it maybe $1,000, some people maybe $2,000. They'll reach a number over here, a dollar sign over here, that you go into this danger zone over here in trading. Okay, this danger zone in trading. So once you reach this amount, when you lose, let's say, I don't know, some people maybe 1,000, some people maybe 10,000. It depends. Okay, but once you go into this danger zone, this area here, okay, you cannot make any more decision. You are in this danger zone. You cannot make any more decision. And let's say example, you're losing 12,000. Then at this point, right, you cannot make decision. You don't know whether you should sell or whether you should buy. Okay, and then after that, right, you lose until a certain amount, right, where it's like a total write-off. That means your 10 or your 20,000 investment become, let's say, left $1,000 or $500. Then you're out of the danger zone again. Then at this point of time, if the losses become so much, you can decide again what to do. Okay, so this part is a small figure. That means from maybe $100 to $200, $300, you can decide whether you can cut loss or not. Then you will come to an area here where you cannot cut loss. Okay, you say, wow, now suddenly lose 10,000, I cannot cut loss. So that is the risk of entering a danger zone over here. And then eventually you'll move out of this danger zone, which you write off. You write off the position. Then you're out of this danger zone again. That means I say, this 20,000 now become like $500. Okay, you can cut loss again. Okay, so the point I want to share with you is you must know where is this point. Where is this point? When do you enter this danger zone? Okay, and you must always trade below this danger zone value. Do you all follow what I'm saying? Okay, some people can be $1,000, some people can be $10,000. I don't know, but there is this psychological level, right, that you can make a decision, and then after that you cannot make any more decision. Okay, so go and think about it. Okay, go and think about it. What is that level that you will not be able to make a good decision? Okay, so the next thing is do not enter beyond this level. Okay, you understand what I'm talking about? If you understand, type yes. Well, today really much lesser people. Okay, only 80. Okay, usually we have like 200 plus 300 almost. Okay, any question? So do you understand what I mean by this danger zone? So in your mind, right, when you have this danger zone level, or you have this amount, make sure it is your rule that you will never break it. You will not break this danger zone. Okay. How to find out the level before reaching? This is a psychological level. Okay. Everybody will have different psychological level. I don't know what is your psychological level. Let's think about it. When in your past, right, when you trade, right, suddenly you invest $10,000, you drop by 5,000. You cannot decide. Right? You're like, wow, blur. Do you follow what I'm saying? Or you blur. It's I dropped 50%. How do? Suddenly kept down. Okay, so you must make sure that you don't enter to that danger zone. Okay, so everyone will have a different level. So I won't know what's your level. Okay, when you reach this level, you cannot make decision. You cannot sleep. Or you keep looking at the charts. Okay, and then you're not making a decision. You're just staring at the chart and not making a decision. Then you're in the danger zone already. Okay, so through experience, you will know what is this dollar value. Got it? Everybody got different thermostat. So some people will be easy. Some people may not be easy. Any question to ask yourself to determine whether you are going into the danger zone? If you are you keep staring at the chart, you are beside trading, you nothing else to do, just look at the chart, and then you're not making any decision. I think that's wrong. Okay, or you cannot sleep. Okay, I think personally, right? You should never trade until you cannot sleep. Okay, sleep is not losing sleep is not worth. Okay, so if you notice that you cannot sleep, then reduce your size. Okay, it's a rule of thumb. Okay, don't because of will make money you cannot sleep. Okay, I don't know whether you will have reached to that level that you trade or you have such a big position that you cannot sleep. So if you cannot sleep, sell until the level that you can sleep. Make sense or not? Okay, sell until the level that you can sleep. Okay, it's not worth the profit is not worth your sleep. Got it? If you understand, I'll move on to the next one. Okay, second one is know your over there, right? 3, right? Actually, there are more. Okay, so know your loss beforehand. Okay, know your loss beforehand. Okay, so what is trading? What is trading all about? let's look at here. What is trading all about? Trading at the end of the day, right, is about this thing. Is about your trading at the end of the day is about what? Trading at the end of the day is about your risk. Okay, your risk versus your reward. Yes or no? Versus your reward. That is the end of the day. What is your game? Okay, how much you risk? Let's say you risk $100. Okay, then what is your potential reward? Let's say a reward is $300. So you must be able to know before you enter a trade. The keyword is before you enter a trade. You must be able to know what is the amount you're willing to risk. Okay, what is the amount you're willing to risk before you enter the trade? Okay, so the next question, like Vincent asked, right? How do you know your position when you enter a trade? Okay, so for position trading, right, it's a bit difficult to know your risk. Okay, you can still calculate. Let's say, example, you have they have an arrow here. Okay, and then you have a stop loss here. Okay, then you can still calculate if let's say the price drop below that, then what is your percentage of loss? Okay, but this kind of risk reward, right, apply more to trading. Okay, apply more to swing trading, apply more to things with ET, entry, target, exit time frame. Do you follow what I'm saying? Okay, that apply less to like long-term kind of trading. Okay. Any question? Okay, so know your losses upfront. What it means is, how do you know your losses upfront? Is you must now calculate your trade, right, based on your your size based on your losses. Okay, your size based on your losses. How to calculate this is a revision again. It is you will use, let's say example, $100 is your amount of money willing to risk. Okay, then divided by your entry, let's say your entry price minus your, this is a revision, minus your stop loss price or your exit price. Okay, then that will be your size you can trade. Okay, let's say example, $100 is your size. Okay, $100 is the amount of risk you're willing to risk, minus off, let's say your entry price is, let's say $100, your stop loss price is, let's say $95. Okay, then you will know that you can only buy up to 20 shares. Do you follow what I'm saying? You buy 20 shares at $100. If you drop $95, you have lost $100. Okay. Any question? So know your size up front. Okay, know your size up front. Know how much you're willing to trade up front. Okay. So this stop loss, right? That's what I mentioned already. When you enter the arrow, okay, your stop loss is you must have more than 10% from your first entry price, from your first valid arrow. That will be your stop loss. Okay, that will be your stop loss. Okay. Benson asks, if you keep losing, should I stick to position trade? I think it's not so much of winning and losing, okay? Because even if you have a 70% strategy, you can lose like 3 times, 5 times, you can still keep losing, okay? But rather it is focusing, like what I covered a few days ago, is about understanding what kind of trader you are. Are you a short-term trader? Are you a long-term trader? What kind of trader you are? Okay, more important is that rather than whether it's making money or losing money. Okay, so again, because you are asking on the context of which one is higher probability, which one makes more money, right? So that should not be the consideration. The consideration, it should be like, what kind of trader am I? What kind of temperament am I that I use that kind of way to trade? Okay, Benson. Okay, the second one is to calculate your size. That means you already know how much you're willing to risk already, how much you're willing to lose before you enter the trade. Okay, that's very important. Know how much you enter the trade before you do. So if you enter the position already, right, you already know, yeah, this is the amount I'm willing to lose already. Then that's it. Then that's it. Okay, don't go and keep thinking about losing, because in your mind you will write off that $100 already. Got it? You're gonna write off the $100 already. So, okay, that is a risk. Okay, that is a risk. And then I want to maybe use this $100 risk to make $300. And out of this $100, you will risk 40% of the time I will lose money, 60% of the time I will make money. And then after that, I do it over and over and over and over and over again. You follow what I'm saying? That is trading. Okay. If you cannot sustain this, right? If you think you cannot sustain this over and over again, then, and you let's say you just lose, give up. Okay. Then chances are you will not be able to get that 60% risk reward. Do you follow what I'm saying? Okay. You need to able to lose, let's say here, 2%, 2%, 2%, and then eventually get to that. Then get into that law of large numbers, right? When this percentage will work in your favor. Do you follow what I'm saying? If you don't have that tenacity to follow through, then chances are sometimes you will give up, to lose two, then okay, give up already. Okay, or worse, people overtrade, right? First time already lose 10, then the second one lose 10, then third one lose 10, 3 times you're out of the game already. Okay, so you must really risk lesser so that you can continue to stay in the game, so that this ratio, right, will work in your favor. Okay, that is the second thing about knowing your stop. The first one just now we mentioned, first one is about knowing what's the maximum loss, don't go into the danger zone. Second one is know what is your risk. Okay, don't overtrade. That means when you enter a trade, you really know how much you're willing to lose. Okay, third thing is about psychology. Okay, it's about when you trade, right, you are not a person in a casino. Don't always think that you are the person in the casino, you're entering a gambling den. Okay, that is the wrong idea. Okay, if you go into that kind of business, then you will always lose. You are like risking, and you're like, how to say, gambling. You're like gambling the business. You're risking $100. You will see whether Tikam can make $300. That is the gambler mentality. Okay, so the mentality, right, is what you should be doing is, so one kind of mentality is you're coming in and then you are just going to the table, okay, and then you're trying your luck at the table. Okay, that is one way of looking at the thing. The other way of looking at the thing is run this like a business. Okay, you run like a business, you become the Stanley Ho, right, of trading, right? So you run like a business, right? You are actually a person that is giving out risk. Okay, you're giving out risk. So in a risk, like you're selling a voucher. You're selling a voucher to people. People will buy your voucher from you. Okay, but people will buy your voucher from you. And each voucher includes what we call the ETET. Okay, so people will buy this voucher from you, okay, which consists of this ETET, and then you are the one that is dealing up the risk. Do you follow what I'm saying? You're dealing up the risk with ETET, and then each time you deal out a risk, you're risking 2% of your capital with the correct ETET. Okay, so people who come in and take your risk, they are like your customer. Okay, you're running it like a business. Okay, you deal out 2% risk, and then all these are your customer. All these are your customer that takes up your risk. Okay, that means they agree that okay, I want to take up this voucher, and but you know in your mind that each voucher, right, or each trade, right, there is a payoff ratio. Okay, for you there is a risk versus reward ratio, and then there is a probability. You already know or already decided what is that payoff ratio and probability beforehand. That's why you deal out this risk. Do you follow what I'm saying? So you run it like a business. Okay. So and again, you're not a person that is coming into the table to go and gamble. Okay, or not. You are, if you are a real trader, you are a person that is dealing out. You are dealing out risk. Okay, like the Sandy Ho. Okay, dealing out risk. Run it like a business. Okay, so the way people go into the casino versus how maybe now gambling, gaming is not a good business, but the idea is you want to, because of this COVID virus thing, right? But the idea is you want to come into this market, right, thinking that you are not a consumer, you are a producer. Okay, you're not consumer of risk, but you are a producer of voucher of risk. Does it make sense? Okay, and you see, sometimes your voucher can lose money, sometimes can make money, but over time, your business, right, over time should go up because of this thing. Make sense? Okay. Any question? No question, type no or give me a like. Wow, today half the class, okay? Maybe it's not a good idea to reduce the group, okay? So any question? Okay, so psychologically, think of it, you're giving out risk, you're not as the taker of risk. Okay, what is payoff ratio? Payoff ratio is the payoff ratio is this, right? Payoff ratio is the payoff ratio is your risk versus reward. Risk versus reward, or reward versus risk. Okay? Reward versus risk. Same lah. Okay? So what is your payoff ratio is how much money you risk versus how much money you get. Okay, so let's say example, this voucher here, right? This voucher here, there is this risk reward number. Okay, let's say 3 to 1. And then that in this voucher again, there is a probability. Okay, there's a probability, and this probability is, let's say, 60%. Oh, so you deal out this voucher. Okay, so then people will absorb the risk. Okay, because the market, right, must absorb your this risk. That means must take out your this risk. Why? Because you really key in your ETT beforehand. Okay. Got it? Okay. A lot of people are still stuck in this area. They are like consumer. Okay, they are like the consumer of business. That means they are still like a person that go and test, go and try my hand and things like that. Okay, they're stuck here. Okay, they stuck here because they say, my this one I must make money. Okay, because they're stuck here. Because they buy the voucher, right? They're still stuck here. So right now, if you are not stuck here, you are thinking of your next 100 trades. This Sandy Ho, you don't care whether he has a saying, right? I'm not worried whether you make win money. I'm just worried you don't come back. Do you follow what I'm saying? He said that, right? He said, I'm not worried that you make money, or I'm not worried that you win money. I just worry you don't come back. Okay, because right, he's running it like a business. Yes or no? Scary, right? Actually. Okay. So that is running it like a business. Okay. Number 3 is really to have this idea of focusing on. I covered this before. Okay, focusing on what you can control versus what you cannot control. You see, the reward, right, is something that you cannot control. Okay, the how much you make is something that you cannot control. Yes or no? What can you control? You can control your risk. Okay, you can control your losses. Okay, so focus on things that you can control. We talk about what is this called process versus result. Okay, result is something that you cannot control, especially in trading. You throw out the risk, right? Doesn't mean that it will always work in your favor. Yes or no? It will always work. It doesn't mean that. Okay, but what are the things that you can control? Things that I can control is, for example, this one, your PL ratio, your probability you can control. Okay, your ETT you can control. So you focus on this, and then focus on doing it over and over again for next 100 trades. Okay, like that. If this guy, right, he's opened a business, right, he just make sure that his customer is happy. He just make sure that the system is right. Then customer continue to come in. Eventually, he will make money, and make sure that he don't get to risk of ruin. Okay, risk of ruin means he no more capital. So if he continue to have capital, it's only a matter of time he'll make money. Do you follow what I'm saying? Okay, so focus on process goal first versus result goal. Okay, I want to give you one bonus. Okay, the last one is what if. Okay, what if some people, when they enter a trade, right, suddenly enter the trade, they have this. This is a graph. I don't know whether you've seen this graph. I don't think you've seen this graph before. It's called dollar. This is I. Okay, I. This is dollar. So what it means is like that. Okay. What it means is when you are trading small money, okay, your intelligence is I. I is your intelligence. Intelligence is very high. Okay. But as you trade bigger and bigger money, the intelligence becomes lower and lower. Okay, your skill, your intelligence become dropping lower and lower. So you must be able to balance between your money that you make versus your intelligence, because you can come to a point when you trade so much, the intelligence become very low. Do you follow what I'm saying? Okay, so now the trick is how to make good trading decision. How many want to know how to make good trading decision? If you want to know, then type give me some heart shape or some good. Okay, how to make good trading decision. Okay, see, a lot of times when you are in the position, that means you bought the stock already or you own the stock already, you become stupid. You become don't know what to do. Okay, you become don't know what to do. Yes or no? Okay. Yes or no? Okay, when you enter the position already, as you enter a lot, then you come very, very blur, don't know what to do, stupid. Okay, so the question you need to ask yourself is, when you trade, right, is after you buy already. Let's say, example, this is the stock here, you buy here already. Then let's say the stock goes to here. Then you ask yourself, right now the price is here, right? You ask yourself, if I do not have any position, that means now I didn't buy here. Imagine I didn't buy this stock right now, and now the price is here. Now the price is here. Will I be a buyer or will I be a seller? Do you all follow what I'm saying? Okay. What if? The key is what if. What if at this, you think, even though you own a stock right here, okay, but now the stock price here, you say, if I don't have a position, will I be buying and selling? So if at this position, right, you say, no, I still be buying, okay, then don't sell. Yes or no? If let's say you are reaching here, right, then you say, what if I have no position? Will I still be buying? Will I still be bullish on this stock? Yes, then don't sell. But let's say, example, you are bearish on this stock, that means you feel that stock is going down, then you sell. Do you follow what I'm saying? But a lot of times when you are in the position, when you are holding a position, you become like, that's how you have here, right, the money part, right? Once you have money involved, the more and more money, your intelligence get lower and lower and lower. Okay, so here you ask yourself, the question is, right now if I did nothing and I look at the chart and look at this chart, should I be buying or selling? If I'm buying, then I hold on. If I'm selling, then of course you can sell. Do you see what I'm saying? So that is a mental trick that you can ask yourself. Okay. Oh, so because sometimes you already know what to do, but because you have psychological baggage or you have money inside that stock, that's why it becomes stupid. Make sense or not? Okay, so you need to ask yourself is, if I know and I know the system, I read the charts, and then now at this point, if I don't have anything, I got zero here. What should I do? Okay, it's not discretionary trading. You can still use a system. You can still use Trader's GPS, and you can still use the position trade, daily trade, everything. You can still do the same. Okay, but I want to share with you something. Why is it that Zoom and Moderna, right? People sell. Like right now, it's up like 40-50%. People like 10%, 20% people sell. Even though the system doesn't say sell, yes or no? But there are people who sold. They have a lot of reason. Okay, if you follow the book exactly, right, there's no sell signal. But why they go and sell? So that is breaking the system. Okay, so then if you don't have, then you ask yourself, right now I look at Zoom or I look at Moderna, right? I don't have position. Is it still bullish? If it's still bullish, I should hold on. I should not sell. You follow what I'm saying? So having a system, having the Trader GPS will help you. But having a system doesn't mean you will not break the system. Not true. Okay, I know people at the graduates group, they still go and sell. Why? I don't know. Because sometimes they are not comfortable with profits, which is true. Okay, because you have never made 30% before, you never make 50% before. Then once you reach that level, you become very uncomfortable. Or you become very uncomfortable, you want to quickly go and take. Do you follow what I'm saying? Okay, so I should share about one more bonus too. Okay, it's the what if question. The what if question is, what if I don't have the position, what will I do? Okay. Okay, those are the summarize. One more bonus, and bonus number 2. Okay, this is bonus number 1. Okay, what if question, then focus on process. Then just now I talk about know your risk upfront. Okay, and then also what is that? The danger zone. Okay, I'll give you all one more. Okay, one more is you must be able to have the ability to observe yourself. Okay, you have the ability to observe yourself. Okay, that means when you are here, right? And you're here, right? And you are now want to go and sell the stock, right? Or want to go to the computer, right? To go and do something. Okay, you must be able to, how to say, you must be able to step out, right? And look at you. Okay, look at yourself. And then say, hey, why am I behaving like that? Awareness. Okay, awareness. I think Tom Besso also talked about this before during the interview, right? You have the ability to look at yourself. When you are greed, when you are feeling the fear of greed, you are feeling the fear of it. You are not greedy. You are not fearful. You are having the emotion of greed and having the emotion of fear. Do you follow what I'm saying? You are not greedy. You are not the greed. You are not the fear, but you are having the emotion of greed and fear. Okay, then you observe yourself, then ask yourself, what does it mean to you? Okay, that is the thing. If you start to feel all the emotion, you be in that moment, then you cannot step out of yourself. But if you can step out of yourself, then you can look at yourself, then you can make better decisions. Okay. So Stanley say, after sell, shares usually go high because of this. Because of this. Okay, right. Because of this process. Got it? Okay, that's why you feel that, every time after I sell already, the stock go higher. Because you were not comfortable with the gains. Yes or no? Okay, so these are some awareness tools for you, right? I didn't cover this in class. This one also didn't cover. This one I covered. Okay, talking about process go, I covered. This one sometimes I cover, sometimes I don't. Okay, this awareness definitely I don't cover. Danger also don't cover. Okay, so I hope this is useful for you all. today? Okay, so I'll summarize again. Number one, know your danger zone. Okay, know your danger zone. Number two, that means don't go outside the danger zone. Okay, don't go outside the danger zone. Number two, know your loss upfront. Know your loss upfront. Trade according to the size your trade. Number three, think yourself as running a business. You want to be profitable in the next 100 trade running a business. You don't want to be here just kind of become or next trade how make money or lose money. Do you follow what I'm saying? You know, focus on the next 100 trades. Okay. Fellow Red, you are a graduate, right? Graduate is in the systematic trader group, right? Oh, then next one is intelligence versus money. Okay, the more money you have, the in the market, the more less intelligent you are. Okay, so they ask a what if question. What if I'm not holding any position? What will I do? Okay, and the last one, the ability to look at yourself. Okay, you must really look at yourself, and you are not fearful, you are not greedy, you're having the emotion of fear, you're having the emotion of greed, then what to do now? Okay? Can? Okay, today is day 18. Yes, almost finishing. Okay. Yeah, 21 days. Okay. I hope this is useful. Okay, today much lesser people, but doesn't matter. Okay. Thank you very much, guys. Thanks for accompanying me for the last 18 days. And then we're moving toward 21 days. Okay. Last thing, for people who are not familiar, right, with our graduates group, I think majority of you are part of this graduate. For people who are not familiar, join our graduates group. This is the place to go. Okay, we have a class, a web class that talk about community. This thing doesn't end. Okay, our graduates, some of them like Susan, all that are old graduates. Okay, Christopher, I think is new. Okay, but the rest are old graduates. Okay, so this thing doesn't end. Okay, so it's an ongoing community. Okay, the next thing is yeah, I think this will be fine. Okay, so thank you very much. Thanks for joining me. Let the rest of the graduates know that right now we only have it in this group. Okay, so that we can focus on one place. Okay, thank you very much and see you tomorrow. Hey, no, see you tomorrow. Bye bye.